there is that we are heavily invested into technology. We have a team of AI engineers that are specializing in AI and development, and we also have myself and Keith that are trading these signals in a live trading room environment. Disclosures are very important. If you're new to trading stock or options, I encourage you to review the link on your screen. I'm not a financial advisor. I'm not registered with FINRA nor SEC. Give me a second. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decision. All right, let's take a look at the market. First of all, I mean, the main event that everybody was waiting for is unemployment data, right? Sorry, not about that. Powell's Fed decision, FOMC decision, interest rate. They have delivered 50 basis point cuts, which is, I think, a positive surprise. I mean, I think it was roughly 50-50 chance. And a lot of people thought that they're only going to do 25 basis points and 50 basis points will be interpreted as, kind of that there's more probability of recession than resurgence of inflation. Initial reaction, QQQ spiked up, and I think the press conference is either over or still going on. But initial reaction, market was up, and now it's turning flat. Right, small caps pulling back, spiders flat, QQQs flat. Interest rates moved significantly higher, actually, even though the rates are cut, it's cutting the rates. So initial reaction, it was flat, and now it spikes up, still trading in the range. Right now, I don't think anything has changed. I would watch this 3.80. I think anything below 3.80 is kind of a concerning that there's a signs of recession. That's what the bond market predicted. But TLT did drop below $100 pullback. VIX, today's VIX expiration, so VIX also spiked up 3% or close to 18. I mean, close to 18, close to 20 level. Value stocks made new all-time high, but then did pull back. So we'll see if it's able to break out. QQQ turning negative, SEM is turning slightly negative. It will take a couple of days to digest the news, right? It's not going to happen overnight. So let's see. Tradespoon. So that's, I think you would want to wait for today. I mean, Bank of Japan, I think, announces their interest rate decision on Friday. I think this is just as important as Fed decision, because if you keep an eye on Nikkei, it has been weak. It had a strong rebound after that 1987 type of sell-off in Nikkei. Rebounded back, but it's now still trading decisively below 200-day moving average. You have this crossover of 50 and 200. Oil has been very weak despite the escalation in the Middle East, and Japanese yen continues to deteriorate, right? And Nvidia is turning negative. So this is something to keep an eye on, right? That it's not all green light, right? I would be careful, and especially if you look at, let's look at some of the positioning, right? Let's look at some of the positioning. All right, we do have YouTube 6 watching. Welcome to YouTube. So let's look at the position. Let's log in. So first I'm looking at the gamma exposure, right? Gamma exposure basically showing where the high open interest is and where is supporting resistance levels. So here I'm looking at high open interest and at which strikes, right? So based on implied volatility, I'm looking for October 18 and September 20 timelines. You have this wide range, somewhere between 540 and 556, where the market anticipates for the model to move for September expiration and to October expiration. And the high open interest is 550. So we know there's a very high support at 550. In terms of overhead resistance, and this is, if you look at the gamma, right, you look at or call open interest at 550, the gamma is 320 million and 600 million. And so it's a pretty large gamma that most of it expires this Friday. So we do have 550 gamma. And then on the top side, 570, very heavily shorted, right? Mostly it's the shorting of the calls at 570. Very large gamma at 570, $1.4 billion worth of gamma at 570. And we can see estimated move potentially 575 to 585 range based on implied volatility. So I think market is going to have a hard time breaking through 575, 580, because this is where the high open interest is actually 570. So looking at the spiders, I think best case scenario between it was in pennies, right? 567. And dealers were forced to sell, right? Dealers are forced to sell at 570, mainly because of this high open position at 570. So I would watch 570. If it does break to 570, I think the next level is 580. More importantly, if you look at all the gamma in September contracts across all the strike price, it's about $6 billion and $9 billion worth of nominal value of gamma that will expire in this Friday, right? We have VIX expiration today, which is causing the VIX to jump to 18 level. And then we have options expiration, OPEX, on Friday, which will leave people with a vulnerable position, right? The October 18 October 18 is 1.7 and 2.4 billion, right? So this is about what, 2 plus 4 billion dollars, and this is $9 billion. So $9 billion will expire, and only $4 billion is left for October. So that means any negative news next week could potentially cause the market to pull back, right? It opens these vulnerabilities. I mean, you don't have to have bad news like unemployment. Today we had, it came in better than expected. Building permits came in better than expected, and they've been negative. Ted, Bob, welcome. I'm glad you guys were able to join. So they were negative. So the positive surprise. So we could have positive news and kind of reinforcing the soft landing with good employment, and the market continue going rally. But until we break through this estimated move and the high open interest at 570 level, dealers will be forced to sell at 570, at least until September 20, right? I think if we let's try to remove these dates and go into October 20, October 18, where the highest concentration. Do we have 570? We do. So 572 strike. So still 572 strike, not huge, 185 million, but still this is high concentration, somewhere between 573 and 580. Dealers will have to step in and pull the market. On the downside, support, a lot less support will be after Friday expiration. So next week, if we do on the downside, if we do reach 550, I would not be surprised. For now, it's well positioned. Next week will be positioned less. So this is the line in the sand that I would watch, which corresponds to 50-day moving average, 550. On the upside, I think every time we reach 570, you're probably going to have sellers, at least short-term, stepping in and try to push market back down, right? And so spiders made all-time high. Now it's kind of pulling back. And I think Wednesday, Thursday, and Friday is this digestion period, right? Digestion period where the bulls and bears are going to meet, and either the bond market is going to be right or the equity market. For now, spiders flat, QQQ flat, semi slightly negative small cap. Gold reacting, silver reacting to the news. What else? Nvidia, without mega cap technology stocks like Nvidia. Let's see, how's Microsoft? Microsoft has been rebounding. It's going to have hard time, for the market to continue going higher. So Microsoft is underperforming, Nvidia is underperforming, Apple is underperforming. All of these are signs that market has reached some kind of a peak, and it needs some digestion and consolidation in the months of September. And we know that from seasonality point of view, one wants to be, September usually is one of the worst months, right? Whether it's election or not election cycle, September usually is a sign of caution, right? Sign of caution. Not a lot of correlation, right? This V-shaped recovery is actually pretty surprisingly, but nonetheless. Bar chart you're looking for. Here's the symbol here. Here's the symbol. What is this symbol? On the bar chart, gamma exposure, I'm looking at the spiders. I'm looking at the spiders. We do have earnings, right? So let's look at that. Let's look at the term structure, volatility term structure for spiders as well. So you can see you have a spike in the front 920, and then after 920, volatility kind of levels off. So that's good. You can draw 30 call, 30 put IV, show the chart. Okay. And then the expected move chart, right? We talked about the expected move chart. For spiders, we have 920 expiration, 927, 10.4, 10.18, 10.24. And you can see on the downside, lower price is 531 by November, by October expiration 540. So you could have as high as 540, as 580 and as low as 540 based on implied option volatility. Any questions about expected move for spiders, term structure, or volatility? All right, you have more and more. When you look at gamma exposure screen, yeah. So I was looking at SPY. Let's turn our attention into earnings, right? So we have two stocks that are about to announce earnings after the close. We have FedEx. I mean, Visa and MasterCard, consumer discretionary in general has been very strong, right? You have Carnival Cruise, right? They're all kind of a strong rebound, V-shaped. Consumers alive and spending money, right? I mean, the defaults of credit cards is going up, but they're definitely spending on, I think airlines continue to outperform in strong rebound. Credit card spending, we have housing starts today better than expected. So consumer discretionary are, well on the life, and FedEx, in the past few quarters had very strong earnings. So let's just review now FedEx. Now I'm looking at the FedEx and see what the expected move is, right? In terms of expected move, you can see about 8%. The expected move is 8%. If it's going to deliver strong earnings, it could get to 325. If it doesn't, 270, which would imply about $26 move, right? $26 move, where it's currently trading at 300. So 25 points to the upside, 25 points to the downside, right? In terms of the expected move. If you look at the volatility term structure, obviously you do have spike in volatility at these front months, right? This is today's expiration as the strongest, and then it deteriorates, right? Understanding that, if you want to do calendar spreads, usually people would sell where there's most premium, 920, 927, and then hedge was maybe a October expiration, right? A very popular calendar spread strategy with the idea that these options are cheap and these options are expensive, right? So very popular strategy, something to keep in mind. So that's volatility term structure for FedEx, and then gamma exposure, same idea, right? So we said $25 if you add to 325, 325 this is strike. So somewhere between 320 and 330 is where there is a lot of positioning, right? There's a lot of positioning between 325 and 330, right? And this is where people are positioned. Some people, majority of the demand is 320 calls, but you do have support at 330, and then actually more there as well. And same thing happens on the downside. So if they don't deliver strong earnings, model sees that based on the estimated move, $25 down from $300, that's your 272, 275 strike. And you can see a relatively large position, 270, and mostly it's 280, right? And most of the gamma is in this week expiration, right? September 20 expiration. After that, there's really no positioning in the monthly or weekly expiration in gamma. Any questions about FedEx? So if you do want to put a trade in the FedEx and want to take advantage of the current market volatility, right? Because you expect that volatility is going to probably persist tomorrow and Friday. I think butterfly, and especially if you're bullish and you think that market, you could do it on both sides, right? So let's look what I did for in my personal account. Maybe you do it in this account. So I did 310, 320, 330 spread, right? 310, 320, 330 was the idea that after the 330, there's really not a lot of gamma outside of that. And positive news based on the estimated move, it will gravitate toward 325, 330 level, right? So if I go into butterfly and I wanted to put on a trade, it's expensive stock, right? $300 stock. So if I don't want to spend a lot of money, then I can select, I did 320 select. Right, and let's see what it's trading at. And I did $10 spread. Right, the wider the wings, the more expensive. But if you want to do 3%, right, the difference between strikes is $3, 3% of the strike price. 310, 320, 330. You can risk $2, and your maximum profit is $8, and your probability of profit is 18%. Basically saying that FedEx has to deliver, and you have to have a strong earnings like the last 3 quarters. Which, just because it was up the last 3 quarters, that doesn't mean it's going to be up, this quarter. Or, if you want to hedge with the puts, you can sell a put spread, right? You can sell a put spread. Let's see. Let's look at the FedEx gamma exposure for FedEx. So you can see large volatility to 70. So let's see how much is the 270. So, So, buy to open, sell to open. Let's do put 20 expiration. So okay, so let's see. 299 minus 25, 275. So 275. Let's see what the 275 strike trading. Based on that estimated move, 275, $2.30. So it's very expensive actually. You're getting almost 1%. Okay, I don't have to sell 275. What about 265? 265 is $1, so about 30%. 265. And then let's see, 255. It's about 60 cents. That would be 20 basis points. I mean, it is pretty evenly distributed, so you could pull, but based on the estimated move, it sees that the high open interest is 265 to 75. So same thing, you can, if let's say you're bullish and you want to finance, right, you don't want to spend $200 on this trade, the way you can reduce that, is by putting a bullish put spread, right? And let's see, the strikes, credit spread, what did I see? Let's see, 265, which is probably, so 265 to 70, 30 cents. So you probably want to do 275 to 65 is $1. So you can reduce it by $1, but then you're risking $9, right? So this is where you want to make a decision based on your account position. Maybe $9 of risk is inappropriate, then maybe you do 272.5 and 265, 7.5 spread, where you're getting 63 cents. So instead of spending $2 on the long butterfly, you're doing $2 minus 63 cents with the idea that the 272 level is not going to be broken, right? The 272 level is not going to be broken based on this estimated move analysis. Right? I mean, you could get as low as 267, but that would be this, some of the trade that I would consider doing. Let's see, 265, maybe 267. Any questions? On the butterfly trade? Wow, 10 people today. Alon, Bob, Jack, Ku, Michael, Patrick, Ronan, Srinivas, Ted. I appreciate your attendance. Yesterday there was like 2 people. I was like a little bit concerned. Maybe something's not working. Today we have 10. So plus we had a lot of people on the morning session and on YouTube. How many people are still on YouTube? Let's see. 6 watching. And we have Discord. So we are everywhere and people are watching. So I appreciate that. Now only 2 people are watching on Discord. Okay. So that's FedEx. Any questions about FedEx? Yeah, so Ted, I'm basically saying, I mean, the problem is that, most of the accounts in Tradespoon Yellowtown was $10,000. So let's say it has a really bad earnings and I do sell the spread, 272.5, 265 spread. I'm risking $6. One contract is $600. So you right away breaking the rule of 2.5%. So it depends on account size. That's why I don't like to trade stocks with the large strike prices, because most people, I think, if the trade goes against you, maybe we'll just do a butterfly and not sell the put spread. But the idea of selling a put spread, if you're bullish on the stock, let's say you say, okay, Vlad, it's a soft landing, Fed deliver 50 basis points, nothing can go wrong. You're overreacting to this options expiration and VIX expiration. It's not a big deal. I think market is going to continue heading higher. Okay, then one way to express your bullishness is to buy a call butterfly for the FedEx, but you need to finance it, right? You say, I don't want to spend $200, right? On this 310, 320, 330 spends. I don't want to spend $200. Well, how do I decrease that? Well, you can sell credit put spread, right? You can sell the puts, what's called risk reversal. Pretty popular strategy, right? You sell puts, you buy debit call spreads, but that's expensive. A lot less expensive is buy butterfly, sell put spread, but it's the same thing. If you can, image of risk reversal, very well covered topic. A lot of people, advertising on, but it's the same kind of idea, right? You finance your bullishness. You express your. Is there an image? Obviously not. Reversal. Give me a second. Дама. Ну-ка, едь и жди меня, я приду. Сиди просто в машине и протекси меня, когда заедешь. Sorry about that. I forgot to press the mute button. Okay, anyway. Apologies for that. Let's see, is there an image of risk reversal? Puts up to create more dynamic payoff and directly bind the underlying. Okay, so, okay. But that's kind of what the strategy is. Any questions on the FedEx? Surprising 50% bonus, the goal was up significantly. Repeat the FedEx earnings trade. Yeah, so the FedEx earnings trade is in my personal account. I'm still debating about doing it here. It's 310, 320, 330 spread. I just don't want to spend $200, like in case it doesn't move that much. So 310, 320, 330 call spread. If you have larger account than 10,000, then that would be my trade. So you buy 310, you sell 320, and you buy 330 call spread. Your 70% probability that the stock will reach that level as of right now, based on options data. You're risking $2 to make $8. You can consider either buying a put butterfly if you're not really sure which way it's going to go, or if you don't want to spend $200 and you're willing to take the risk, then you could sell, I think, one is 270 bull put spread, right? So you can do 275 to 665 spread and collect $1, right? You can do 272.5 put and 265 put, collect 63 cents. So based on how much risk you want to assume, right? You can generate a profit and reduce your $2 butterfly by maybe 50% or maybe by 30%. Just depends how much risk you're willing to take. All of this you can see probability of reaching that level is basically 10%, 10 to 15% is. Got it. Thank you. Any questions on FedEx? So we did FedEx calls. We talked about FedEx call, FedEx puts. Leonard is also doing the earnings. We had better than expected new starts. For family homes, Leonard is at all-time high. It's kind of reversing together with the rest of the market, right? Trading to the downside. eBay is finally pulling back. Yay. Apple is in the right direction. Gold reverse. Let's see. Regional banks are flying. Spiders turning positive. Dow Jones turning positive. That's good. QQQs are positive slightly. So, going back and forth probably for the next couple of days. We're going to have similar price action. But Leonard, same kind of idea, right? You can look at the positioning, and we can look at the expected move. So Leonard expected move for the next 2 weeks is 8%, similar to FedEx, 8%. So if it delivers strong earnings, strong guidance, then you see the stock could move $15 up or down, $15. So now that if you look at the gamma exposure of Leonard, $15, 188 minus 15 is 173. So this is your strikes. And most of the gamma is at 180 strike. That's probably too close to the estimated move. And then you do have this, kind of gamma that's spread throughout. But if you look at the gamma, the more pronounced is 180 strike, right? The 175, 170 is kind of less. So on the upside, it kind of dies out at, I guess people are not very bullish here. So people are selling calls and they're buying puts. Nobody's selling puts here. Actually equally distributed gamma 920 and 1018. Any questions? Unexpected move for Leonard. And, the term structure is same kind of thing if you consider doing the calendar spreads. You definitely see, a lot of volatility in these 920, 927 contracts because of the earnings announcement, and then volatility collapses and drops. That's why calendar spreads or diagonals are very popular. People sell 920, 927 calls and puts and buying hedges, in monthly, maybe 10, 18 contract, monthly contract. Any questions on Leonard or Tesla? Oh, sorry, Leonard or FedEx. I did notice that Tesla did get filled. Half of the Tesla got filled. Sorry, no, this is delayed. Let's see. Let's try it again. 235. Right, so Tesla has been a good trade. Model identified signal last week, identified signal this week. You can find these signals either in Active Trader or on Yellow Tunnel. We're actually working on integration. If you have a Tradespoon user ID and password, you'll be able to, not now, but you'll be able to log into Yellow Tunnel. Or Aggressive Power Trader, right? Right, so these are the signals where you can find, Teslas. This VNO has been a great signal. Bob, you still holding VNO? What is the other one you were talking about? ERQ or EQR? EQR? Equity residential, yeah. They're similar, but this VNO thing that I closed is just kind of a vertical move. So that's been a good trade. So these are where the signals are coming from. So Tesla, I've been trading around Tesla, bought it to 30, bought it to 26, sold this one to 29, sold this one, half of that at 235. So 2% gain, 1.5% gain, continue to hold now half of the original position for Tesla. So I think that's the only thing that got triggered today. I did close IWM spread. Well, again, market could collapse or market could rally. And if market rally, then you're in full sale. That's why if you don't have time, usually the 2 weeks, 1 week prior to earnings, prior to the expiration, you want to close. And I did buy Eli Lilly yesterday. So those are the recent trades. Any questions about Leonard or? FedEx. Any questions? About 10% doing well. CIM, got it, Bob. Thank you. What price did you get on FedEx Butterfly? FedEx Butterfly, the call Butterfly, 310, 320. Well, I put the trade before. Right now it's trading actually 550 minus 315. So 630. 630. 80 cents. So see, 310, 320, 330 call spread. Let's see. Right now, I have to look because I did the trade yesterday and it doesn't show you this together. September 20. So what are those strikes again? 310, 320, 330. So 320, 310, and 330. It is trading at $1.24. $1.24. I mean, I paid, I think, down $100 current value. Minus. It shows me 550. It shows me that I'm down $100, but it's probably just due to bid and ask. I mean, the 320 got it more expensive. I bought it for $1.54. Now it's trading at $3.15. So the 320 definitely because of the volatility and the more expensive now that when I bought it. But so is the other legs. Got the same. Okay, got that. Well, we'll see. We'll see if it can rally to that all-time high 320 on the announcement. All right, it's 2:41. We talked about Leonard. We talked about FedEx. Let's talk about the rest of the positions that I have. So Apple. Looks like Apple. I do have a spread. It's October. If it's small caps was September, this is October. Got oversold, right, on the prospects of the new iPhone. Maybe less people want to upgrade less. Sold off. Now it's fighting for the 50-day moving average, up 2%. So still holding on to Apple. eBay, I've been trading the calendar spread. Wanted to show you an example of diagonals. I sold the put, right, with the idea that it should, there was high open position at eBay. Let's look at eBay. Haven't looked for a while for gamma exposure. 65, right? We talked about 65, and then it had very high interest at 60. So it broke through the 60 level, right? It broke through the 60, but it's unable to break 65. And that was the idea behind the trade, that it will stay between these large open interests, but not gonna break through 65. So it did get to 65, got rejected 63. I mean, ideally, I wanted to gravitate towards 60. So if the sell-off continues, then maybe, I can sell that put again. I have 55 put. October 55 put for now. JP Morgan, we do have yield curve is continuing to normalize. JP Morgan, I mean, kind of following the market. Let's see what's the market thinks right now. Again, steepening of the yield curve, right? That's good. The yield curve is steepening. 2s and 5s are almost now the same, and 2 decisively below 10 and 30, so that's good. VIX is at 18. People are still nervous, and I mean, we're still fluctuating between gains and losses. So that's JP Morgan, October. I still have bullish position. I added LA Lilly position. I still have a hedge, so I do have SH and QQQ put spread. QQQ has been underperformer. Seems like that's the trade of this year, rotation out of the mega cap technology momentum stocks into the value stocks. That trade hasn't been broken yet, and QQQ continues to underperform. It's about 50-day moving average, but it's a downward sloping 50-day moving average. It's unable to break this trend. I propose to have at least one hedge in your position. Silver, I do have silver position, and Tesla. We talked about Tesla. I trimmed Tesla, and silver is very sensitive to interest rate. It did pull back. We had a sharp rally. I trimmed the position. I probably would be considering buying it back again at 50-day moving average. So start thinking about buying the 50-day moving average. That are all my positions. That's all I have for today. I appreciate your time. Thank you very much. I do want to finish a little early today, and unless there's any questions, keep an eye on earnings Tesla. I mean, FedEx and Lennar. Keep an eye on this, price action of interest rates, dollar. I mean, the dust has to settle. You can see pretty volatile price action so far. People need to digest the data. Market is overbought, so that gives an excuse to sell, right? It gives an excuse to sell. I would be careful next week as Friday expiration comes in, and today VIX expiration. By the time people reposition and put new position, if there's any negative news like escalation in the Middle East, and all of a sudden there's a full-fledged war between, Lebanon and Israel, Hezbollah, probably I shouldn't, Hezbollah and Israel, then, you could have, that opens the door to these dislocations in the market. And keep an eye on Friday to Bank of Japan decision on interest rates as well. Some people think that carry trade is over. Some people think they're not. I have no idea, but time will tell. All right. Thank you very much, and have a great day.